everyone, welcome back to my channel. So my name is Onisa John, and this is the beginning of a series of sharing different areas of accounting. And today we are going to be talking about basics of accounting. The basics are pretty simple. It'll be talking about what we really need to focus on and hone on when it comes to accounting, like the first step. I am a Baruch alumni for the finance major, and I currently am a budget analyst for New York City. I'm also a QCC alumni for business administration, and these are the financing techniques that we use inside of business ventures every day. In this video, we are going to go over what the basic equation is for every accountant and their journal entries. We'll break down what assets, liabilities, and equity are, what they are, and also their examples, and how they're calculated in this equation. So let's get started. Inside of this slide is showing the basic equation that every accountant uses. Assets equals liabilities plus equity. A equals L plus E. Assets are the resources owned by a company. Liabilities are the credits or anything that is owed by the company. And equity is the ownership of all revenues or any assets that the company owns. So that is the A minus the L to equal E. These are certain examples of assets, liabilities, and equity that are shown on the screen. For assets, there are supplies, equipment, accounts receivable, cash, and cash collections. For liabilities, there's accounts payable, accrual payable, salaries and wages payable, deferred revenues, loans, and equity is revenue and expenses, owner's drawings, and capital/investment. Now notice how there's a plus and minus for each term inside of the equity section, and that's because this inside the schedule will show how much is being added inside the revenue and how much is being taken out inside the expense for that month. So this is very crucial when you do the accounting schedule. We're showing an example of different transactions that happen inside of a month in a regular fiscal year for any company. For example, there are owner investments of $10,000. For that month, the rent expense is $500 per month. There's a loan that's taken out for $2,000, and so on and so forth. In the next slide, we're going to show how each are calculated inside of the assets equals liabilities plus equity equation. Shown inside this slide is what the examples of the different transactions I had showed on the previous slide. So what we're going to start with is the owner invested $10,000 into the company, which is on the top. So you see cash is a plus 10,000, and then capital is a plus 10,000. Where the cash is, that is the A inside assets, and then where the capital is, that's the E inside of equity. So both sides are balanced out. Next, the rent expense comes up to $500 per month, so you have to deduct $500 from cash and $500 from expense, both the A and the E. That's the only two that we're working with as of right now. Next, advertisement expense is at least $210 this month, so you have to deduct $210 from cash and $210 from expense. The next line, supplies were purchased on account for $1,300. So inside the A, now we're switching it from cash to supplies because we're buying supplies. And then for accounts payable, we're going to the L part of this transaction. So we're putting 1,300 in supplies and then 1,300 inside of accounts payable. So we're balancing out because it's on account. The next line, a loan was taken out for 2,000, and since we're talking about a loan, we're talking about accounts payable. We're borrowing money, so you put 2,000 for cash and then 2,000 for account payable, and that's balancing out for the A, L, and E. And then the next line, owner withdrew 200 from account. So you deduct 200 from cash and then 200 from drawings. The next thing that you have to do is the cash was received costing 600, so you have revenue coming in. So that's why we have to put 600 inside of cash and inside of revenue. At the bottom, it totals up each line where you can get the total assets is 12,990, and then the total liabilities and equity is 12,990. So that is it for the basics of accounting. The different transactions that you can see on a monthly basis and how you can equalize it from assets equaling liabilities and equity. Thank you so much for seeing how we went step by step of knowing what assets are, liabilities are, and equity, and how we can use it inside of an accounting schedule. Next videos, we are going to go over more complex accounting, and we can also cover other areas of tax, auditing. I'll try to post as much as I can, but please look for my content whenever you subscribe and like and share. Thank you so much.